Now let's turn and get a little bit of market reaction to those job numbers. Our market monitor guest tonight says the stock market is in a, quote, corrective phase. He's Peter Sorrentino, Senior Portfolio Manager of Huntington Asset Advisors. So, Pete, how much of a correction and when does it happen? How long does it last?
Well, I think we could really begin grinding throughout the course of earnings season. You know, we're now coming up into that window when we get surprises both positive and negative. And our view was that really the earnings growth started to slow in the latter half of last year, and that the market had really started to get ahead of itself. We think a lot of cash came back in that had gone out for tax purposes, and that this was really just a flow-driven market. It really wasn't the fundamentals making a difference here. So we think we could easily be in for a 10% correction here. The market was getting perilously close to our full-year target, and we still had 3 quarters left to go. So we think this could basically play out. It could be a grinding correction. We could see this go out over the next 2 to 3 months.
All right, let me ask you this way. We saw a dramatic reversal in the Dow today. It was down as much as 170 points. It finally closed off, 40 points. It seems like the stocks are still pretty resilient and investors are still kind of bullish.
Well, remember, this is also a holiday week, too, and this is on fairly light volume. I think a lot of people are still phoning it in from the beach at this point. And no one wants to make huge bets in here because, again, we are still coming into earnings reporting season. And if the analysts have got it wrong, as they did on the employment estimate, then maybe corporate earnings rebounded sharply and that we see that the market's, in fact, undervalued. Our view is that's not the case, but I don't think anyone really wanted to bet big this week on which way it was going to fall in earnings season.
All right. Even though you think that we're in this corrective phase, you do see some buying opportunities. And let's go down your list of stock recommendations. Marathon Petroleum is at the top of your list. This is MPC, ticker symbol, trading on the big board. Now, looking at the stock chart here, it was like $34 last summer, and now it's up to $82. Does it still have room to grow?
Yes, absolutely. This is a company that was split out. We think that it really captures the domestic hydrocarbon renaissance. North America is becoming a net exporter of refined hydrocarbon. Marathon's a great way to play that. And so that's a name that we think is not well understood, and we want to own it in here on any kind of a dip.
The other name you're talking about is General Electric. The stock has been stuck in this $20 range for quite a while. Why do you like it?
One, they finished the divestitures that they had talked about doing. Their balance sheet's in great shape. They've right-sized GE Capital. We think there's a real potential upside in the healthcare sector now that we sort of have the Affordable Care Act in place. We're grinding through that. And you get a 3+% dividend, so you're paid to wait while this thing plays itself out. So we like that story. You
have a tech stock on your list. We know tech stocks have not done well in this whole market rally. Cisco Systems, and it got hit hard today. It was down 2%. What is the attraction with Cisco?
Well, really, Cisco's been refining their business. They have been getting out of their slow-growing business lines. They've been buying businesses that have growth potential. And if you talk to any businesses these days about where are they spending, they're spending for productivity gains. And Cisco's really continued to position itself in the forefront there. So as things move wireless, as more goes over the internet, Cisco's tried to keep itself right in that sweet spot. And we think that any rebound in business spending is really going to benefit Cisco Systems.
All right, we have half a minute left. Let's see if we can squeeze in Deere & Company. This is another one of the companies you're recommending, DE, ticker symbol, trading on the NYSE. What's the story here?
We think there's also a renaissance in agriculture in North America, and we think Deere is a great way to play that. More farmland is going into production, farm incomes are up, farmers are spending on productivity, they're spending on equipment. Deere is a great global story in that particular industry, and we think that's a great place to be.
You covered so many sectors, including agriculture. Thank you so much. Pete, do you have any disclosures to make?
I do not own any of those names personally. However, we do own all of them in our funds.
All right, excellent. Have a great weekend. Peter Sorrentino, Senior Portfolio Manager of Huntington Asset Advisors.